Hello, hello, hello. Let's don't. Okay. Okay. Let me know in the chat box if you can hear me and you can see my screen, just to be sure that we're all on the same page. Let me know. Second. Okay, okay. So we are live now. Yep, yep, yep. Okay. Um, how is it going, everyone? Let me know where you're joining us from. I'm watching. I'm right here reading the comments from this side. Okay, so you're gonna see me, looking straight down to the point. I just wanted to be able to connect with everyone. So yeah, let me know where you're joining us from. Um, Rover is watching live from Nairobi, Kenya. Beautiful country. Let me know where you're joining us from. I'd love to know a lot more about people who follow me and just kind of connect with them. It helps me kind of know, how far we're reaching people. So we're gonna start in a few minutes now. Hem21 from London. Yeah, it's great. It's great. So today we're just going to be analyzing GBP It's been the market has been a little bit, tricky, but there's no better way to break it down than to break it down with you guys here. Okay? There's no better way to break it down than to break it down with you guys here in front of every single one of you so that we can all get to see what the market is doing together. So, that being said, how has your trading been this week? You want to send us some chart? how has your trading been this week? What would you say has been your experience in the market this week? Let us know. Let us know what has been your experience in the market this week. And how would you say you've been very, very cautious since since the market has been really going a little bit crazy? One thing for sure is that yes, the market is changing. Of course, not the way it used to be, but I mean, usually when the market gets to the summer months, it gets a little bit more stable, but we can't say the same for this year. It's been an interesting year so far, you know what I mean? It's been a very, very interesting year, due to, a lot of stuff going on in the US, So yeah, it's pretty been you know, exciting at the same time interesting because there's a lot of reset going on in the world, which has a direct impact on the market actually. So yeah, we're gonna get into the market now and let us break down the markets together. And I'm going to be sharing what I'm seeing in the market with you guys. I'm going to be breaking the market down and I'm going to be showing you guys my expectations, right? Objectively. And, for a lot of people, I would say that yes, it's very, very important for you to learn about Forex trading. It's worth it. I'm going to be honest with you. It's really worth it. But when you think about Forex trading, don't just think in terms of how much money you can make. Think of how long enough you can play in this market. Because trust me, at some point, you are going to be tested. I promise you. Your knowledge is going to be tested. Everything about you is going to be tested. Let me know if you guys can hear me clearly. Let me know if you guys can hear me better now. Can you hear me better now? Let me know in the chat box. I'm just going to be waiting on your chart. I want you guys to get every single thing I want to share with you guys today loud and clear. So let me know. Is my voice clear enough? I'd like to see some people. Let me know. Okay. Yeah, I think we're good. So, like I was saying, I love to give us some sort of like nuggets before we get into the mix of things, right? And the first thing I'm going to say is when you are learning to trade, when you are really, really trying to understand how trading works, it's very important for you to not just focus only on how to make money. It's also very important for you to focus on how to stay in the market for the long term, how to be patient in times of losses, how to scale when the market gets better. How can you capitalize on the fact that the market is better now and let me, for the slow season, how can I maximize on this? I think it's very, very important because the honest truth is the market is going to get its own turn, right? And you cannot ascertain the effectiveness of your strategy if you've not been able to actually take it through different market conditions and still survive and still have your portfolio standing at the end of the day, right? And this is where you get tested as a trader. This is where you get to prove yourself as a trader, not just on the good days. Unfortunately, a lot of us, inclusive of myself, when we got into this game, we got into this game with a mindset that, we just want to come make money, right? But over time, the market has really, really taught and trained us on how to think, what our expectations should be, and how we should position ourselves in the market. So if you're watching me today and perhaps you are a new trader, perhaps you are just, getting into the market, perhaps you're 1, 2 years in the game, I want you to buckle up, right? I'm not going to make it easy. Forex trading is the easiest way, I feel like is the um hardest way to make easy money. Yeah, the hardest way to make easy money. So I'm not going to sugarcoat it like you're going to get into the market and you're going to make all this money. I think people will kind of create that narrative around trading. I would say disingenuous, right? Because it doesn't really represent what real trading is. Because there are different levels that you are going to learn alongside your journey. Number one, you're going to learn about having a strategy. That's where it starts. That's what gives you an edge in the market. You're going to have to learn about a strategy. Number two, you're going to learn about how to apply your strategy. Knowing your strategy is different from knowing how to apply it. Now, the application process is what involves your emotions, right? So because you know a thing or because you know a car doesn't mean you know how to drive a car, right? You have to be able to understand how to apply it. And the only way for you to understand how to apply it is when you backtest enough in the market. Now, after you've learned how to apply your trade, something happens while you're backtesting it in the market. You're obtaining two things. You're obtaining your datas, and your data is going to go on to affect your confidence. That means ability to have done this over and over and over to say, you know what, every single time this pattern presents itself, I'm going to execute on this pattern regardless of the outcome of the last trade. Even if the last trade is a win, even if the last trade is a loss, regardless of the outcome of it, I'm going to execute the same pattern. Of course, over time, there are going to be room for you to modify and optimize, but every of the foundation of your trading is going to be based on these patterns, right? And it's very, very important for us to be able to have this realistic approach to trading, because from my experience, a lot of people quit not because they can't do it, but a lot of people quit because they have this misrepresentation of what trading should be. So when their expectation is not matching the reality, it leads to some sort of like depletion in confidence and depletion in the ability to feel that they can actually trade, and it leads to them just quitting, right? So I'm going to tell you this: Forex requires you to find a strategy. It requires you to be able to use your strategy, and it requires you to be able to build data, which goes on to build confidence in your strategy. Then once you're done with that, it takes you through the last journey, which is psychology, right? You don't need to learn psychology theoretically, right? I believe, my personal opinion, there is a waste of time reading about trading psychology. Trading psychology is not what you read yourself into, it's what you actually practice yourself into. So the best psychological teacher in the market is your chart, is the screen, right? Is what you do. And you can't have a cycle. And this is where it gets tricky, guys. You can never have a good psychology in the market when you have multiple strategy and you don't even have a decision you're making. You're just all over the place. You don't have one thing that you're focused on, because the idea of psychology is just your ability to have feedback on how you must position yourself mentally. So if you have different, trade strategies right now, your mind is all over the place. Today, you're working with trend line. Tomorrow, you're working with support resistance. Next tomorrow, you're working with indicators. Another time, you're working with SMC. Another time, you're working with ICT. At what point do you start to notice pattern, right? And those patterns you start to notice are what builds your psychology. And understanding those patterns and how to position yourself when they present themselves is what builds confidence. That is psychology in expression. Psychology is, how do I think about the market at certain point in time? How do I position myself in the market at certain point in time? How do I get into the market at certain point in time? When I see this pattern, even after the market didn't give me my profit on the last trade, how am I able to enter the market at certain point in time? When I've made so many losses this way, how can I become patient and focus on the fact that I have a risk strategy to maybe downsize my risk at certain point in time? That is what we call psychology. The idea of reading yourself into psychology does not work. It's like reading yourself. It's like you want to farm and you're reading yourself into planting. No, you have to do the actual job. You have to plant, you have to water, you have to be patient, you have to watch the plant grow, you have to till the ground, and you have to water the plants, right? And that is psychology right there. And the best teacher of psychology is actually the market. And you can only learn, you can only position yourself to be able to learn when you have just one strategy, when you're not jumping over strategies to one another. One strategy over the course of the year gives you confidence and it gives you data. These data that you know, that I know, is what goes on to affect the way we think about the market. So let me give you an example. If over the course of 3-4 years ago, I've traded one strategy over and over, and my equity curve, though not linear, that means not on a straight line, has gone up, down, and it keeps going up to the upside. It tells you something, that your strategy has a high efficiency because the equity curve is going up. And over the course of 3-4 years, you must have traded the market through different conditions, through financial crises, through different presidents, through different bank central bank orders, through different interest rate change, through different inflation report. You've been in the market with the same strategy. What happens? Over the time you get data, over the time you see familiar patterns, over the time you see familiar market scenarios, right? Over the time you build experience, and that is what we call experience. And that experience is what is recorded in your mind that we call, that forms and builds your psychology. So the idea that psychology is a topic that you must learn about is actually not realistic. Most of what works in the market is practical. They are not theory. So if you find yourself struggling with trading psychology in the market, which these days the market can really give you reasons to doubt if you really understand the market or not, I think I'm going to recommend that you continue to trust your psychology, continue to focus on it, continue to submit yourself to it, continue to submit yourself to your strategy, and continue to, the more you apply, the more the outcome, the more you know what to adjust and what not to adjust. That is the only way you can build momentum over the long time. But if you think that jumping from one strategy and one teacher to another person, oh, this person just made 100,000, 200,000, and you do not have a track record of what they do, how they do it, you're just going to be all over the place. And sadly, more than 80% of traders actually move in this way. And this is why, while everyone can be successful in trading, not everyone will. Not everyone has the mindset. Not everyone has the patience. Not everyone has the perseverance. Not everyone has the mindset of consistency and intensity to focus on one thing. Unfortunately, majority of the people that go into trading to make money. I mean, all of us, right? But over time, the market should actually start to train your mind. The market should obviously start to teach you how to position yourself. If you are not learning those vital lessons, your chances of profitability are probably going to be low. Because the biggest thing the market is going to do to you is to train you on how to position yourself. Then you can now have access to the money. And talking about positioning, it's not just only about winning. It's also about how to stand when you are losing, right? Say, for example, you see even top institutional traders, they go through a series of downturn, but they have the strategy that they've built around how do I manage it, right? So don't look at trading as just an offensive centric kind of industry where you just keep on going, trying to make money. There are days you might want to stand and defend yourself. So let me give an example. There are days where I wake up and I'm like, you know what, there are no opportunities in the market. And all I want to do is to stay on the defense. I want to stay very passive. And there are days in the market where the market is actually trading around key interest area where mentally I am activated for offense. I'm activated to finding trade opportunities. So you need to be able to be very objective and be very self-conscious of what are the information that the market is telling me today, and for you to be able to turn that into an action. That means you must have been in the market, practice one strategy over and over, which leads me to what we want to work on today. So we're going to analyze the market. As you all know, I trade GBP, JPY, and that is my baby for sure. But, you know, lately the baby hasn't been babying, you know, and it's super crazy. And, you know, over the past, I think 3-4 trades, and listen, not everyone can actually come in public and tell you, right, what they're doing. So over the past 3 to 4 trades, you know, we've actually been on flat out down drawn. Sometimes some of this trade moves 50%, you know, in profit, and, you know, they come back down. Does it mean that we are not actually managing our trade? Does it mean that the market does not give us reasons to break even and all of that? I think it goes back to something, right? Regardless of the market condition, I think one of what proves what proves if you are a good trader is your ability to manage your psychology within the realm of whatever the market is giving you, and focus your mind on just your opportunity. And this is the reason why a lot of people would rather prefer, you know, trading with bots and, you know, all of that, right? So because bots do not have emotion, right? Bot does not know even going through like down drawn. It's just spotting the next program that was run into it, right? So that is how it is. So let's look at the market real quick and let's see what the market is offering us. And if you've been on my free channel, you know I've been talking about the 208 level far too long. It's crazy. I've been talking about the 208 level probably since February, right? I spoke about it briefly last year, and it's crazy because that's where the market is going to, regardless of what the loss might be, right? If I was trading more on like the higher time frame, I probably would have found an entry and just keep riding it, right? But I love to break things down to see what the market is doing right now, what is doing on the long term, and just to have this information. So let's look at the market, GJ, and best believe GJ is correlated to a lot of other pairs as well, right? So whatever we do here, you just want to mirror it into other pairs as well, right? Some days I look at gold and just kind of peep through to see what's going on right there, because it helps me to know the state of, you know, the world economy, right? But yeah, DJ is one of the most, if for me, I would be a little bit biased because I've been trading these over like 7 years now, you know. DJ is probably the best Forex pair, you know, is probably the best Forex pair that you can actually trade because it has volatility, it has volumes, and, you know, it's just super trendy. And the more trendy and less consolidative a pair is, the better, right, it is at giving you opportunity to make profit. So for folks who are not on my free channel, you know, I trade just GJ. If you're joining us for the first time, and if you want to join the free community, you can click on the link in the Telegram group. And yes, that's where you kind of find me. You know, I'm big into psychology. You know, probably you find me, you know, talking about my trades and what I'm doing, and I keep it transparent. I feel like a lot of people don't keep it transparent, and they create this first narrative in the mind of people, and people feel like they are not actually making progress because they are losing. I'm not that kind of a person. I have nothing to lose. You only get to hide, behind a mask when you have something to lose, right? But you should be able to show your profit as much as you're able to show your loss, because people don't learn in profit alone. When all I have to tell you is about if all I have to tell you is about my wins and I can't tell you about my loss, then you should be careful of me, right? Because there's also lessons in losses, right? There's always something to learn as well. How do you maintain yourself? How do you manage down drawn? How do you continue to stay with your consistent risk per trade, and all of that, right? So that's every side the trading throws at you, there's always going to be something for you to learn, and it's very important, right? So let's look into the GBP-JPY pair. From what I can see that the market is actually looking to going up. Remember the last time I think I had a live stream, I told you guys about this low rejecting the market right at this level, and we might be having a Fibonacci rejection right here, and the market did exactly that way, right? So let's look at what the market is doing right here. We have a low right here. The market overall sentiment is still on an uptrend. So when you kind of look at things really carefully, you're going to find out that we are still on an uptrend on this pair, right? We have the major low right here, then the market starts to build into this beautiful structure point, and the market is still just on a higher low structure, right? So with that being said, the most important thing we wanted to see is we wanted to understand where the last push was before the market started to make the move to the upside. So we have this move right here, and this move went on to breaking where this resistance right here at this level, and this is the market just kind of closing back into this level. So we have this right here, we have the market closing back into this level, but the market, even though closing back into the major, structure point right here, it has still not violated the current structure point where the market is moving. So you have to be able to differentiate, what is the market doing based on the major move and based on the current move. There's a current move, there is a projected move, right? Yes, the market has broken these above, which also indicates, a very strong bullish, possibility in the market. However, the market is still respecting this level right here, and everything that we seem to have so far so good has just been the market actually giving us some consolidation right here. So this is how to position yourself in the market, right? You should be able to actually look at what the market is doing and be able to tell the story. Don't be overly technical, right? Be a little bit more, have a little bit of more storytelling in the market, actually. I mean, there are different ways to look at the market. If you are not looking at your market through the lens of very strong algorithm, you should be able to tell the story of the market. Don't just go on and trade support, resistance, and all of those stuff. You need to be able to build a context. You need to be able to build a framework in your mind for you to actually work with. So the framework we're building now is the fact that we have a higher low right here from the monthly framework. So we have the higher time frame from the monthly, and we have this higher low right here. And again, we've mentioned that this level right here is a point of Fibonacci, right? So we have a Fibonacci level right here. And if you can remember from the live stream, because we are all telling a story, the market has broken this previous area of resistance, as you can see right here. And not just this level being a previous area of resistance, is also a Fibonacci level. So I would, just from a monthly time frame, I would expect the market to keep going to the upside, right? And you can see that all of these aligns with our low, low, higher low, higher low, higher low, and higher low, right? However, we can't just take a trade right on the monthly time frame. We want to be able to break things down to the lower time frame and just continue with the story. So now, looking at this story right now, what do we have and what do we know? It's very, very simple. The market currently is sitting on what? Let's look at it from the weekly time frame. So now we have the monthly higher low right here. Then on the weekly time frame, what do we have? We want to see how the market has been moving. We want to understand what the market has been doing. It's very simple. So from a weekly time frame perspective, your goal is not just to focus on everything that happened. Your goal is just to focus on what is currently happening right now with respect to where is the next move of the market? What's the next thing that the market can do for us, right? That is how to think about it. That is how to understand what to do about it. So now, what do we know from a weekly point of view? From a weekly point of view, we start to see that the market started to move on, a new structure point, higher low, and high to this level. And the market actually came back right back down to this level, never broke above this level, rejected, and again changed our structure, right, to a bullish structure. So now we have a bullish structure point in the market with our weekly low right at this level. So this is beginning to make sense to us right now. So we have a weekly low right at this level. So we have a higher low on the weekly, right? Right here on this level. So it's always very important for you to always label your levels, because out of sight is out of mind. Trust me, very good. So now that the market has broken this level, the market broke this level right at this point here, right, to offer us a new bullish structure, meaning that further confirm, our push to the upside, right? So I want you guys to pay attention. Look at how we are telling the story of the market. Don't be overly technical, okay? Don't be too focused on your technical trading and, support resistance. No, you have to be able to tell the story. And that is how you are able to kind of have every broad context of what the market is doing, whether for the long term or for the short term. This is how you're able to position yourself either for the long term or for the short term. So now that we have the weekly higher low, so what does it look like? It looks to us like if the market is going to the upside from a weekly point of view, we definitely have this level first, higher high, right, on the weekly, right? Higher high on the weekly. Yes, on the weekly. So we have this higher high right where the market is. So that means that if we continue to find this rejection right here and the market continues to move, we're going to this level, which further confirms the level I've been talking to us about, the 208 level, if you've been following the story, right? So the 208 level is where we are actually looking at ultimately. But I want you guys to look at something, right? Notice how the market made the higher low right here. The market make a higher low right here, confirm to the upside, and the market went on this very, very big retracement for weeks and months, and the market came to as much as this level, and the market never, ever, ever touched this higher low. Now, the question is, what does this mean? This is the weekly higher low. The retracement never touched the higher low, and it rejected as a week and started to make the push to the upside. This should tell you something, that the market you see does not operate randomly. This market you see doesn't operate randomly, right? They follow specific principle. And I'm going to pause here to actually educate, because I'm not just trying to analyze. I'm not an analyst. I'm an educator, right? I love to trade and educate you guys, right? The market's not breaking below that low and start to reject is a very big significance. And I want you to start paying attention to the little things in the market. It tells me something very important. And the story is very simple. Never actually look at the market. Never actually look at the market and make decisions based on candlestick. Don't make decisions based on candlestick. And I'm going to ask you guys, okay? I'm going to ask you guys this very important question and say to you guys, what gives you information of everything you do in the market, right? At the end of the day, trading is all about analyzing data. But what gives you these data? Candlestick. So if one candlestick can give you reasons to make decision, right? Don't you think that if one candlestick can give you this, right? Don't you think that a combination, right, of candlestick can give you even way more broader information? Of course, yes, right? So the point is this: when I tell you guys to focus on overall context and structures, I'm telling you so that you can have more information and you can be able to make decisions. So now that we have this, what is the next thing that we're looking out for? Well, what we want to see is this: that after this break, we start to have lower low, lower high. We started to have lower lows. We have this lower high, then we have this low, and the market may just be ready for the push. And like I said, the market is actually on a very bullish run. Okay. So now from a daily time frame perspective, what did we see? From a daily time frame perspective, it gets even way more interesting, because now we can now see that the market, what is the most recent move in the market? The market has, of course, the market is coming up from this low right here. The market went onto this high. The market is making lower highs to this point, never broke below this level. Then the market went on to break above this lower high right here, and this has been the retracement. So what seemed to be a break at this point, weekly time frame, is just a break at this point. So different time frame are going to give you different information, but all of them carries the same direction, right? So from a daily time frame perspective, where is the daily low? We have the daily low right here. We have the daily low. You look at the candlestick. Let me give you guys some pointers. You look at the candlestick that closed the lowest, right? Not the shadows, right? So daily, so this is a daily low, or you can call it a higher low, right? A higher low on the daily time frame. So one thing you need to see is all of them carries different information points, but notice how all of them actually are rejecting this level, right? For trend line traders now, a lot of trend line trader or channel trader would have seen a channel right here, and this would have been a very beautiful opportunity for them to, buy to the upside. But listen, we are not channel traders, and we trade far beyond, that level of expertise, right? So now, what do we see? What is the information I want to see? I see that, okay, the market is not rejecting the higher low on the weekly. The market is not rejecting the higher low on the daily. That means that the market is rejecting, the market is still right in part, because right here, this is the last major higher low that was lower high, that was broken based on the push to the downside. And this downside could not break this, meaning the uptrend is still there. And now finally we've broken this level, meaning that the market is looking for more retracement for it to reject into the market. So now let's go into the 4 hours, which is where everything kind of makes sense to us, So from the 4 hours time frame point of view, what do we have right here? So this is where we kind of start to find what are the reasons, further reasons why the market should return right here at this point. So from the 4 hour time frame, you can see the structures way more clear. These are the lower high, and you can see the lower high came to break right here, and all of these are rejection, and the market has been making higher high, higher low. You can see higher high right here, and this is an higher low, and the market might just be moving to the upside. So we have from the low to the break point of the high. A lot of you guys are going to wonder, why did he use this Fibonacci that way? There are specific ways you use Fibonacci. Most people use Fibonacci independently, but I train my students to use Fibonacci with respect to structure. That's how you're going to get it accurately. Most of us think these tools are standalone tools, but they are not standalone tools, right? You can use them literally with respect to structure. So we have this reversal level right here where the market may be going back down, right? Which on the 4 hours time frame, you can also see right here. So we have the fib right here, and you can see the market broke the fib only to come back to respect it. So that gives me what I need to know about this point. So now, the next thing I want to see is, because I'm not taking the whole move, right? I want to be able to take the move step by step. So the next thing I want to see how the market made a move to this this retracement move is going to help me to find levels where I'm going to be buying too. So we have the low after the market broke this level. Let me just bring it out for clarity. So we have a situation where, let me make it clear. So we have a situation right here after when the market broke this level right here, right? We have a situation after the market broke this level right here, the market started to retrace. So what we want to do is to understand the structure of the retracement. So what do we have? We have high, lower low, lower high, lower low to almost the Fibonacci point, then a new lower high, lower low touching the Fibonacci point, then a new lower high, then lower low, which almost reached the weekly higher low, and the market has ever then been rejected. My point of interest is just in this most recent one, because that is where it's going to offer me my most recent opportunity, right? So I wanted to see this right here. And, you can name it whatever you want. This is the lower high. And now this is where we had right now. So what we're trading right now is the market making a retracement to the Fibonacci level and almost to the next higher low, and the market took off, and we have a possible trade opportunity right at that level. So what do we see right here? It's very, very important for us to know that the market has been moving on lower low, lower high structure, right? Then we have a new structure point right here. And what we see right here was a break of structure. The break of structure tells you that the market is actually going to the upside. So the market broke structure right there, but we had a little bit of constraint, right, on our last trade, which was this previous areas of support on resistance, which the market rejected, a couple times, and that was why we took our sell right from here. And the market actually went and really into like 60% of our take profit before the market reversed on us, right? So we had this level. That was why we took it, but the market literally just went on to offer a trade opportunity at this level, lower lows, lower highs, the break of structure, rejection at that daily level. But this was a pullback to the discount point at the system point, and we can see that the market is now making a move to the upside. So what would I expect for the market? I think the market is making a move to this point. Of course, all our bias has led us to the fact that the market is on a buy. So we have this right here broken, and now the market got right here and all of this, and now the market is making a move to the upside. So we know for sure that this market is making a move to the upside. So now, what do we see right here? So you want to be able to have an understanding of what the market is doing. So this was the break of structure, right? Looking at how the market has played out right now, we've updated, our information that the market may not be going back down for a very long time, and the market might be going up. However, the question is, there are reasons why the market, gives us all of this pause every now and then. What we want to know is what is going on in the market. Why is the market giving us all this break for us to understand? And this is where it's very, very important for you to be extremely, extremely strategic in the market. So yes, because you know where the market is going to, doesn't mean you're just going to jump into the market. You want to be able to have different contexts of how the market is moving. So let me give you one of those things, right? The first thing is to understand that the market is moving on lower low, lower high. Then the market went back to form into another inside structure right here. And this inside structure is what is broken right here. So as much as we have the major lower highs and, the market forming into this lower high, right, as well, right, we have another lower high. So these are all inside lower high structure, right? And we have this most recent lower high structure where the market is actually forming. So it's very, very important, right? I taught this concept in my course, right? And for people who really want to have understanding on chart structure, you can actually go there and go pick it up, right? So now, a lot of people are just going to go on buying, but it's a little bit tricky. Don't just buy yet. Why? Because we have the major structure still in formation, lower low, lower high. then the market will come and give us this. Will the market give us another lower high before the market start to move to the upside? You have to be extremely, extremely careful about it. So in as much as you know the direction of where the market is going, I think it's very important for you as a trader to actually know the right time to get into the market. And that is what defines your profitability. It's not by the powers of your analysis. It's about how you can convert this analysis to execution and effective execution, right? So now, what do we see right here? One thing I know is that right here from this point, I have a Fibonacci point right here where the market rejected at first. So you can see that the reason why the market gave us this tiny little bit of consolidation is because of this Fibonacci. And you have to be very, 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 you have to be very, very careful around that level, right? Because that level could actually lead us, into some sort of like rejection before the market start to make a move. So we're just going to label this the fib, right? That means now our bias are beginning to form, right? Let me just take this off. Our biases are beginning to form now. Why is our biases beginning to form? Why? Because we now know that the market is at a fib level. And if the market ever breaks this fib level right at this point, then that means we are actually going to the upside, right? If the market doesn't break this fib level, that means we could have a little bit of rally to the downside, right? We could have a little bit of rally to the downside, and perhaps we might be going for some very down push before we eventually come back and start to push right in this sequence, right? So what do we do at this point? We go to the 1 hour time frame. So on the 1 hour time frame, we are definitely coming closer to our point of execution, right? So what do we do? On the 1 hour time frame, we want to be able to identify different levels leading up to the market to this level. So you have strategic level to look out for, right? We have this point where the market was rejecting. Then we have the next higher low point right here where the market was rejecting from. And then you have the most recent higher low point where the market is rejecting from. So what have you been able to do? What you're trying to do identifying this now is you're creating different context and different storyline for whatever the market will be doing. So you're creating the most important level right now. Now, what does that mean? That means if the market should reject this fib level, perhaps we could find a trade opportunity to this level. And if the market should break below this level, perhaps the market might come here. And if the market should break here below this level, perhaps the market might come here. And if the market should break into this weekly low, that means you should understand that the market is violating something right there. And this is why you can't be too absolute when you're trading in the first market. Just be objective to open up this opportunity. That means as much as you're seeing the market being bullish on the monthly, the weekly, and daily, you could also have a correction coming up where the market might just make a move down before it starts to go back up. So you can't just make decisions just like that. You have to be very detailed. So now that we understand this, let's go to the 1 hour time frame. So what are we trying to see? We're trying to see if the market is going to respect this point or not. So if the market should respect this point, we already know the levels we're going to. If the market should break above this point, we're going to leave the market to break, and upon any pullback that we have, then we can now decide to join the market back to the upside. If the market decides to break to the downside, we're definitely going to be looking at the market giving us some stuff like this to the downside. So we have the two levels right in place. So what does it look like? From the daily time frame, the market looks really bullish because it's respected this point. From the 4 hours time frame, we have a caution right here because the market is rejected at the fib level. And if this fib level wasn't very important, the market wouldn't have rejected it and consolidating. And we can see that the market is trying to break it back. We do not tell the market what to do. We just wait for the market to do it, and then we take our opportunity based on the information the market is given, right? But we have different levels that we're looking at the target, right, for the market. So we have the major structure, we have the minor structure, right? We have the major lower high, we have the inside structure, we have the major higher low, and we have the inside structure, right? So we wanted to be able to work with that. So what do? It's very simple. All I have to do now is just wait and sit down on this time frame which is my execution time frame. For some people, you can go into the 15 minutes time frame, but I'm not actually looking at the 15 minutes time frame right now because it's not really too stable. I'm going full swing mode, right? So 30 minutes is just enough for me. So all I want to do is to know what the market does. I have my bias in mind. If the market continues going back up, I know exactly where I'm going to be looking at the market if that opportunity offers. If the market continues to go back down, I know exactly the different opportunities I'm going to be looking for when the market goes back down. So in this kind of case, the market is not ready. I can't make decision. Do I have the context? Yes, the market is bullish in overall, but based on the lower time frame, can the market make some certain correction before it starts to move in its direction? Definitely the market can actually do that. And this is where I'm going to drop this analysis, and we're going to see how it goes. And you're going to see how the market is going to catch up. When the market breaks to the upside, definitely we're going to that next level. Wait for the next pullback. Let the market give you a confirmation, buy along. If the market rejects this fib level that has rejected in the past, you can always wait for the market to change structure, offer you a discount, and you can sell to the downside. So this is what I'm going to be looking forward to on GBP, JPY, and let me know if you guys fully have an understanding of what we have going on. And if you have any question, definitely I'm not able to answer all questions, but I just wanted to show you guys how beautiful having the understanding of the market can be when you analyze the market with context. Notice how I'm not overly technical. Notice how I'm not bringing my last trade bias into what it is right now. Notice how I'm not saying, oh, because I sold and the market moved 60% in my direction before the market went against us, and then because of that I'm angry and I think the market is going to buy. No, you have to be very, very strategic in the market. Thank you guys so much, and I just hope some of you guys are learning and are appreciating like real knowledge. I'm not here to show cars. I'm not here to show houses. I'm not here to show watches. I'm not here to show money and all of that. I'm here to show you how you can actually find freedom, learning how to trade yourself. A lot of people would rather focus on that. And unfortunately, a lot of people get caught up in the shiny stuff. Whatever is going to last doesn't have to be shiny. And again, we're not the same kind of people. And I just hope while all this stuff lasts, you take advantage of it. And if you want to upgrade your knowledge, you can shoot me a text on Telegram, and I'm just going to sign you up in. And listen, I'm going to leave you guys with this. Learn how to stay in the market as much as you want to learn how to make money. How to stay in the market to play the long game is more important for trying to make cheap money. I know a lot of people, because I get texts and emails, I've gotten countless emails of people who have blown their account just in recent time because the market has been uncertain. Blown big portfolios, blown small portfolio, right? This time is going to pass. But the question is, how many traders are going to remain to take advantage of the easy days, right? Not a lot, right? So you want to position yourself in the right direction of the market. You want to position yourself so that when the market gives this easy money, you can be able to grab it. And this is how to trade in the Forex market. And whenever, for people who have a strategy and whose strategy they find really good, and the market may not be in your favor, I want to give you an encouragement. This happens in the market. Maybe this is your first time you're experiencing it. This happens a lot in the market. Stick to your strategy. Optimize the strategy. Don't run away from it. Optimize means, what am I doing wrong? This is an opportunity for me to learn how to perfect my strategy, because the top market conditions actually build up a very strong systems, right? So don't be like the rest that is just like jumping from one place to another and taking signals and all of that, and end up just being in the same spot over and over. The market does not respect how long you've been in it. The market respects how long you've been learning while being in it. And this is where I'm going to head right now. Thank you guys so much. If you got any question, I won't be able to stay on to read comments. You can shoot me a text directly through the link in the description and find me on Telegram. And God bless you guys. And I hope you guys are learning. Thank you.